Global shares edged higher on Monday, November 10th, as investor sentiment improved following signs of progress in Washington to end the prolonged U.S. government shutdown. Optimism surged after the U.S. Senate moved forward with a measure on Sunday aimed at reopening the federal government, signaling a potential end to a 40-day political stalemate. The standoff has left hundreds of thousands of federal employees without pay, disrupted food assistance programs, and caused widespread air travel delays. Though the Senate breakthrough lifted markets, the bill must still secure passage in the House of Representatives and final approval from President Donald Trump before the government can fully reopen. The progress in Washington sparked optimism across financial markets. Nasdaq futures surged more than 1.2% in early trade on expectations of economic stabilization. Asian shares opened higher on Monday, reflecting investor confidence that the U.S. gridlock could soon be resolved. MSCI's broadest index of Asia-Pacific shares outside Japan gained 1.36%, extending last week's modest gains. Japan's Nikkei jumped by a similar margin, up 1.3%, while Hong Kong's Hang Seng Index surged 1.5% amid renewed risk appetite. The positive sentiment quickly spread westward. By midday, trading in Europe, equities were in firmly positive territory. The Pan-European StoxX 600 index rose 1.1% in early trade, with nearly all sectors in the green, led by banking, technology, and energy stocks. Traders and analysts say a resolution to the U.S. budget impasse would restore confidence in both domestic and international markets. The 40-day government shutdown has taken its toll, squeezing consumer confidence and interrupting key government services. From air traffic controllers to law enforcement officials, hundreds of thousands of employees have gone unpaid since the shutdown began. Essential food aid and healthcare programs have faced funding gaps, while routine economic data reporting from government agencies remains suspended. The Federal Reserve is now operating with incomplete economic data, complicating its assessment of growth and inflation trends. White House economic advisor Kevin Hassett cautioned that the shutdown's economic costs could lead to a contraction in U.S. GDP for the current quarter if delays persist. Despite warnings of economic strain, markets view the Senate's bipartisan cooperation as a promising sign of a deal in the near term. Currency and bond markets also reflected improved sentiment, with investors anticipating a rebound in U.S. consumption and federal spending once the government reopens. In pre-market trading, all three U.S. stock indexes, the Dow, S&P 500, and Nasdaq, pointed to a stronger open as optimism gained momentum worldwide. As investors watch Washington closely, the coming days will determine whether political compromise translates into a sustained recovery for U.S. and global markets alike. For now, optimism remains high, but the financial world knows that one final hurdle still stands between relief and renewed uncertainty: the vote in the House and the president's signature to end the longest shutdown in modern U.S. history.